let's move into number 3, investor-friendly business structure. Can you talk a little bit about that?
This is a big deal. So the structure of the business is also something, yes, we will be looking at. So some structures are more friendly than others. The main thing as an investor that you're thinking about, so just think about you and I again, Scott, we're thinking about investing in one of our buddies' businesses. One of the first things you're going to be looking at is, am I shielded from any potential liabilities? That's always going to be at the top of the list. Are there any tax advantages that I can take advantage of in this particular structure as it's already set up? These are some conversations. These are some of the first initial conversations that investors are going to be looking at when they're thinking about investing in your business structure. So say you have a sole proprietorship versus a person who has a C corp. Well, obviously the sole proprietorship is going to have more risk built into it versus having a corporate structure where you have the corporate veil and all these other things. And so an investor is not trying to sit there and educate you on how to structure your business. They're going to expect that you've already worked through that due diligence on your own, and you're coming to the table with that friendly structure, and you're ready to go.
Absolutely, absolutely. We had a unit in the Business Blueprint 2.0 about legal structures, and we went over that. And the one takeaway, if you didn't hear it, folks, is get you a legal structure that protects your personal assets and helps to minimize liability of all stakeholders in your organization.
Yes.
So making sure that you're on top of that and not just doing LLCs, and not saying that you shouldn't, but not just doing it because you heard that was the cheapest route to go. That's not going to be as attractive to an investor who can sit with someone else who can say, I decided to go with this legal structure because I thought of all the tax implications and the risk associated with these structures, right?
That's right. And let's talk about LLCs really quickly. So, I know that's a common structure that people use. Let's talk about the taxation aspect of an LLC. So let's compare it to maybe a C Corp. So one of the things you want to think about, whether you're the investor or the person who actually founded the company, is so thinking about when revenue comes in and their profits and they're distributed, you're going to be taxed. If there's an LLC, it's going to go directly to the taxes of the person who's part of the LLC. Versus if you have a C Corp, you're only going to be taxed on what it is that you receive. So for example, say you receive dividends from the C Corp. That's a taxable event. But prior to that, you're not going to be taxed on anything. And
right.
So as from an investor perspective or the founder, you really want to think about that. Like, when do I want to be taxed on these proceeds as they come into the company?
Right. Very good stuff, man. Very, very good stuff.
Yes, sir.
Very good stuff. So again, we're talking about the 10 ways to attract investors to your business. And we just discussed having an investor-friendly business structure.